Good afternoon, my name is Jordan Lambert, market analyst at Jolly Time Management. Gold skyrocketed late last night and today it's reached its high as 1272.63 following a huge sell-off in US equities. We have seen quite a change in market dynamics because the impressive US weekly jobless claims caused investors to sell equities because it indicates that the tapering will begin sooner rather than later. And gold would normally fall as well under such expectations, but this time round investors have diversified this risk by buying gold and in large amounts. The buying had been building up recently because of the trouble in Egypt, so that's contributed to this rally. And in addition to the improving jobless claims, yesterday's CPI data indicates that inflation is on track to meet the Federal Reserve's inflation target of 2%, increasing the odds that stimulus will be toned down next month. Let's just take a look at the chart. So I'm looking at the daily chart now because it's good to zoom out and take a look at the bigger picture when we've seen such a big rally, just so we can identify the next resistance level, support, trend line, whatever it may be. So this green line here, this green diagonal line, is the long-term bearish trend line. So price is still quite far away from this trend line, but if it carries on at the current rate of appreciation, could intersect with the trend line around between 1380 and 1390 possibly. But just be aware, if price does interact with this trend line, we could see a bounce. We have support at 1270, but we are really far away from that at the moment. That is a good distance away. But the next, the higher horizontal yellow line was former resistance at 1347. But now, when resistance is broken, it can then be a good support level. So be aware, if price comes down to this level, we could see a bounce. Because it's likely to act as support. The next resistance level, except for the trend line, could be 1420. The market found a lot of resistance during May and early June at this level, so if we get a rally, it could definitely bounce at 1420. But we are far away from any support, resistance, trend lines at the moment, so the best way to trade this and try to predict a turning in the market would be to use overbought, oversold indicators. At the moment, the Bollinger bands and the Stochastics are in overbought territory. They've not generated a sell signal yet because the market is still strong. But if we do see a sell signal according to the Bollinger or the Stochastics, combined with reversal candlesticks, maybe a shooting star or a bearish engulfing candlestick, might be a good time to sell. But it's difficult to say when because we are still in a very strong market. And it's difficult to assess a trend line as well because we had such a sharp spike in price. It's difficult to assess where the bullish trend line is as well. So I would just wait for either the Bollinger Band or Stochastics to generate a sell, or wait for price to interact with one of these levels before acting. Right, thank you very much for listening, and I'll speak to you again on Monday.